Hi everyone. Today we want to talk about $6.8 trillion question. We want to talk about the state of deposit being held by Canadian banks and credit unions as of the second half of 2024. Specifically, we want to answer the following 6 questions. Question number 1. Who are the largest deposit-taking institutions in Canada? Question number 2. How the market is being shared between these players? Question number 3. Why nearly 25% of these deposits are held actually outside Canada? Question number 4. Why only 7 players out of 400 players control 90% of the market, which we call them Big 7? Question number 5. Why aren't US or European banks active in Canadian retail banking? And question number 6, and the last question, is that why have Canadian bank deposit more than doubled in the past 10 years? First, let's talk about the landscape. In Canada, we have 30 Canadian banks and a few hundred credit unions. What's the difference between banks and credit unions? The main difference is that banks are regulated federally by OSFI, but credit unions mainly regulated provincially. Another factor is that banks are for profit. They are owned by shareholders. Credit unions are owned by members. Beside the banks and credit unions, we have rising fintechs like Wealthsimple, No Financial, and Co. The largest one, Wealthsimple, actually now managing level comparable to Equitable Bank. Now let's look at the top 30 deposit-taking institutions in Canada. As you can see, the market is dominated by 7 players, which are the big 6 banks plus Desjardins. To put their dominance into perspective, the combined deposit of 8 to 30 deposit-taking institutions in Canada are combined to like $959 billion, which is less than BMO's deposit alone. Now let's go over the top 10. First, the famous Big 6, RBC, TD, BMO, Scotiabank, CIBC, and National Bank. For the largest ones are TD and RBC that are ranking among the top 30 banks in the world. The 7th player is Desjardins, which is a largest credit union, is based in Quebec with operation in Ontario and Quebec. Its size is larger than all other credit unions combined. Then the 8th player is a unique one, ATB, because it's neither credit union nor bank. It's more closer to credit union. It's owned and regulated by the province of Alberta. Then the 9th player here, we should escape it, because Canadian Western Bank was recently acquired by National Bank. To be specific, it was acquired in February 2025, so it's no longer operated independently. And the nice one is Equitable Bank, one of the fastest growing bank in Canada. And the 10th player is Vancity, which is the 2nd largest credit union and is based in British Columbia. Ranks 11 to 30, as you can see, mostly held by credit unions. Also, as you can see in the deposit part, most of the deposit held by the big 7 are term deposit like GICs. Now let's talk about geography, where the deposits are being held. Like as of October 31, 2024, the total deposit being held by Canadian financial institutions is as like $6.8 trillion. From this $6.8 trillion, $5 trillion are held inside Canada. $1.3 trillion, which means 19%, are held in the US, largely because of the TD and BMO continuous acquisition of the banks in the US. And close to $500 billion are held outside of Canada and the US, mainly by Scotiabank. Now let's talk about the dominance of Big 7. When we look at all these deposits, the deposit inside Canada, for example, 89% of them are being held by this Big 7. Means the rest of like a few hundred credit unions, banks, like maybe 400 other financial institution only have 11% market share of the deposit inside Canada. When we look at internationally, actually it becomes worse, because when you look at globally, the market share of this big seven is actually increases to 92%, means that only 8% is left for all other few hundred financial institutions in Canada. What would be considered a bit concerning is that in the last 10 years, the market share of this big seven actually increased. If you look at, for example, deposit inside Canada, their market share is actually increased from 86% to 89%, means that all other financial institutions, like 400 of them, are kind of struggling to keep even their own market share. So with over 400 banks and credit unions inside Canada, why the market is so concentrated? Key reasons are regulations favor larger players, even that the regulation is actually stricter for the larger players. Why? Because smaller players struggle to absorb the high compliance costs required to expand geographically or enter to new products. So it's a kind of barrier to enter here. The second aspect, which is the most important one, is the brand loyalty. Many Canadians stick with these big seven players because of the habit, because, for example, the parents have worked with these banks, the convenience, they know them, and their massive marketing budget. The third factor is actually physical location. It still matters, especially for older audiences. Then the fourth one is that financial knowledge gap. Why? Because many Canadians don't know that. Most like deposit have insurance. Actually, CDIC insured deposit up to 100,000 in all banks, and credit unions actually typically have a higher limit. Means the credit unions, for example, in Alberta and BC, actually the deposit held in them have unlimited insurance by the provincial government. So there's another question comes, why there's no very active American or European banks in retail banking in Canada? We had HSBC, but acquired by RBC. So it mostly comes to three factors: a stricter and costlier regulation. Then the market size. The market size is 8 million French, 32 million English. Geographically is expanded like from coast to coast. It's hard to penetrate. And the third factor is that difficulty to compete with the brand loyalty of these big six. Let's look at the deposit growth. When we look at the financial institutions in Canada, their deposit growth, we can see that in the past 10 years, their deposit has increased more than 100%. National Bank is the leading in the pack with 178% growth. Very impressive. So why more than 100% growth in the deposit? Are Canadians becoming richer? Actually not. So the answer is mainly because of the money supply expansion, exponential money supply expansion, specifically during the COVID. So when there's more money in the society, there's more deposit. The second one is that continuous and ongoing acquisition of small players by the big six banks, both inside Canada and outside Canada. So if we want to summarize, Canadian banking sector is one of the most concentrated and also stable in the world. But this stability comes with significant costs, very limited competition, limited product, and a slow innovation. So maybe it's a time to reevaluate this stability, that maybe we need more competition. So let me know in the comment, what do you think about this concentration of banking in Canada? And what has been your experience with banks and credit unions inside Canada? Specifically mention very good one or very bad one. If you like this video, don't forget to like, subscribe, and share it. Thank you for watching, and see you in the next video.